up, down, up, and like that here is this. And we managed to get to that high before the close. And that high translates into a new low. And pretty much we went to a new low right here for the open.
Ding, ding, ding.
Yeah, so upwards movement is what we're looking for. Went green zone to red zone. Hey, man. Unbelievable, guys. Unbelievable. Like, check this out. Like, we're literally doing the Wyckoff. Like, what's it supposed to do next? This is the only chart we really need right now. Like, should I put this in here? Make it easier. And even from that B point, looks like it was a 261. And we just went from 261 to 188. Perfect. It's like they even fit that in there. Now just remember that in the Wyckoff, even though we go up to that B point, there's a 50% chance that in phase C, we make a new low. So when you get to the target, it makes sense to make sure you're paid. And like, if you don't have a stop in profit, I mean, that's like crazy, right? Like, well, you're going to let the trade become a loss if you went long? That's nuts. You know? Yeah, there might be an opportunity to get back in. A lot of the times lately I've been seeing them turn into expanding wedges where like it sort of makes this sort of motion, and that can be really attractive to get in when it makes like a 3 drives pattern or something like that. But we'll see if it does something like that now. Way up. Because it's almost like we just got to a blue line as well. In a way, it's like there's a blue line sort of under here. We just sort of came up back to it. And of course, there's going to be a downtrend line there too. We can keep an eye on that.
Hello.
Hey, what's up? Good, you?
What's going on?
Nice. Yeah, so today we're looking for it to go up. Ultimately, it's a pattern called a Wyckoff. The movement that we're on right now is from the bottom, and that green arrow shows, that green marker shows that we went down to that bottom, and then immediately right off the open that we were able to capture some upwards movement because of the chance that it could make that entire journey up to the green dash line like it would in the schematic. So here we go again at the high of the range. Anybody that's bought anything today at any time is now up. There's no way you could be down any time today, bought at any point today. Doesn't matter where. Which is an interesting fact to comprehend. We came up off of this. So we are here again now. And from the M, we have created a W. The M reversed on a 261. Will the W reverse on a 261? Because it's not like we're not at the target. You know, like when we came down here, it's not like this was a target. But when we reversed from the 261, we knew that the response could be all the way up to that B point. And it did come all the way up to that B point. And then now it's like, well, this would be if it did continue the pattern. And I'm like, whoa, that's intense. Like, that's not just like a little move. That's 135 freaking points. And if we did that, it would look like a triangle. Like, if we did that in a hypothetical situation, we would be able to draw a line on this high, and we would be able to draw a line on this low. And I'm like, are we feeling that triangle right now? Becomes the question. And I'm like, okay, well, last time we did something like that, it was here. Very similar kind of triangle. I know it's not exactly the same, but I mean, it's very kind of similar. Like, let's take a look for a second. In the event that we were to make all the way down there, where would our next 61 be? The POC? Why? Why would they put that 61 there? Well, because everyone that sees the 61 starts drooling over it, and they just end up trading at that same toxic level because they've placed a 61 there. People see 61, they trade 61. Now, in my opinion, this 61, I mean, I love 61s, but this one's placed at a really bad spot. Like, let's take a look down here. When we make a 61 of this movement, is it in a chop? No. Is it in a bad spot? No. Is it in a spot where people have been tormented? No. Is this 61? Yeah. You kidding me? Like, that's right at the area where everyone's traded. So I think it's very hostile when we were like, oh, what do the people like? The people like the 61. Oh yeah, I know we've been keeping them all here. Like, how do we get more people to trade there? Well, give them a 61 in there. Maybe we'll get more people to trade there. You know, because we all know that they're all there anyways. Like, that's where most people are in from. There's no better way to have done it than to take it up from the bottom and then to hedge it from the top. Knowing that if it comes down to the 61, you don't have to rebuy it, you're already in. You know that you're profiting off of the decline down to that level, but it's not going to be as far as where you originally got it. So you don't have to take a risk buying higher than where you originally bought it. It means that you can afford for more of a pullback, whereas somebody that buys from the 61 is basically getting a glorified middle, because where's the 50? The 50 is exactly in the middle, right there. 61's like basically the fucking middle. So, again, we have come back from the 188 now and denied the people of the 261. We've denied the people of their 61. And now we have this 61, which is the 61 of this movement now, being slightly higher than the POC. So we started here, got that circle. We dumped from the circle. Oh, geez. Dump from the circle. Check. That's PS to SC. Now from the bottom, from the SC, that's up to the AR. We go all the way up here. That's like coming back to the circle, but not all the way. Like, you can still see there's a little bit of a gap there. And that's what we've done to get to that point. So then we come back down, not all the way though. Back down, but not all the way though. And then we come up, but all the way just a little bit higher. A little bit higher. See? And we come all the way up just a little bit higher. Like that. Kind of like we're touching the circle, but I mean, we didn't get there all the way again. It's sort of like just a little bit under. And then from that high, we obviously ended our session there, so it had a lot of overnight session. But let's say we just carried on from that high, and you know, we dump next. Like, the next thing to do from that high is to make a new low. So in the morning today, we opened up at that new low. We made that new low. The ST in phase B was down there. So we started all the way over here from that new low. And then we rally up to this point. It's not quite as high as the highest point, but we basically get to about here. And then we start chopping into a 61. So when we get to that point up here, it's not quite as high, because this high right here would be the highest point. That would be all the way up here. Now where we are right now is a little bit below that high, kind of like that. That's like right here, right there. And then what we do is initiate this grind. Oh my God, chop, 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 chop. And I'm like, do we feel the fucking chop? Like, you know, like, yeah, we do. And at the end of the day, it's chopping. And what is it supposed to do in that chop? Well, it goes from the bottom to the top. We make a 61. So you can see it goes chop, 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 down to that yellow line, and then finally goes up. Now, where's our yellow line here? We didn't even make it to it. Our yellow line would be there. That's where our chop is supposed to be. It's supposed to be chopping here. Like we're chopping a little bit high. It's like we've been chopping up here. Like, this is what we're doing today. We're chopping there, which is not incorrect. It's just a little bit off. And I mean, compared to what we usually do when Wyckoff is wrong, this is not really wrong. It's still doing the chop from that high. It's just not dipped down to the 61. And it did make it to the 50, which is really close. But they're kind of stripping people from the opportunity to be able to buy that 61 and get that movement. So if they're gonna complete the Wyckoff anyways, what happens? We end up breaking this trend. And we take all of what we did underneath and freaking double it. Double it, literally. So if we like this movement from bottom to top, try doubling it, roughly. You know, where would we be then if we were to complete this pattern? So there's a lot of value still in this to be able to complete. After the chop's done, what do? Do we double? Because that's what it's supposed to do. So, and it's been quite good today at literally following the rules. Sometimes it has a little bit of offness to it, but if you let it slide, it's a good thing. It's better to just give it a little bit of leniency, I say. But it just makes me think that if we were to make it from this point here to this point here, that would be from this point here to that point there, though. I still believe the best value of the day is going to be in the break of this red-yellow line, even though it may be the most difficult line to retain exposure to. That everyone that tries to go for a trade that gets you through that line always gets reset unless they're holding from the bottom. I mean, anybody that's quote-unquote late to the plan is paying the price for it. And that's the brutal reality of this situation, is that the institutions didn't start from this chop. They started from the best price, and they're still holding from it likely, while as everyone else is likely reset from an area that's hard to be exposed to, even if they're just, if they're trying to hold for more than 10 minutes, it's hard. If the value that's given to your short-term trade isn't managed properly, it does end up coming back 9 times out of 10 and getting the trade and making it a losing one. So it means that trade management is going to be the backbone of a lot of people's success in here. Being able to take the profit and protect the profit while it's on the table is really important. If you let trades become losses after they're profitable, then it's going to be the hardest for those people in this area. I mean, it's not like when you're going for trades in this area that you're going to be going for something that could give you a lot of profit. I mean, the biggest thing that there is offering right now is the exposure to the daily Wyckoff continuing. Now, if the daily Wyckoff continues, we go up to the high, and it makes a new high again all the way up there, which is huge, because that just means that even one contract could be worth almost $3,000 just for holding one contract from one of these days' lows. Like, let's say it doesn't work this day and you catch it this day, it doesn't work this day, and you catch it that day, but then one day you get away with a stop and profit on one contract, it could be worth $3,000 just for holding it to the high. Just one contract. So it doesn't, why I say just one contract is because you know how much risk it takes to get exposure to one contract. Almost anybody can fight for that. Almost anybody can work for that. And there's not much risk that you'd be taking on to get that one contract. And if you work and work and work and end up with that stop and profit on one contract, your job is just to manage that one contract to the high and you get paid $3,000. And I'm like, if you do two, you're laughing. You know what I mean? So I'm like, that's where that comes in. I'm like, what's the value in fighting for short-term trades that might bleed into this long-term trade? Because you get one day on top of your profitable short-term trade, then you might get 2, then 3, then 4, then 5. Then we might be at all-time high. And at that point, you can just continue to protect your profit all the way up to the long-term destination that I believe it will go to. It's just, this is the difficulty right now in the short term to get that long-term plan in play. And no doubt, this is going to be getting rid of people. People are going to be quitting like flies right now, right? Because it's just, everyone has got a reason to complain about the fact that it's not doing what they want it to do. Doesn't matter what if you're really bearish or you're really bullish, then that means you want it to go farther than where this has been going. And none of them have been getting that. But if their stops are in the nearby area, they've been experiencing high frequent, hits of their stops every time they put their stop anywhere near their trade, it gets hit. And I'm like, if they want it to go a far distance, that's really tough. And that shows me that the institutions are actually guarding against people being able to get an easy trade for a long distance. And the people that are in from the bottom and holding, they're fine. They're allowed to go through this. They're paying their dues in difficulty through patience and discipline, and it's showing the market that they really want to be exposed, that a pullback isn't enough to get them out, that a chop isn't enough to get them out, that they know they want to be long for more than what this is offering. That's interesting to me. They've mastered a way to be able to make us see the value that we think we see, and then move it against us. Make the master plan at any given time to hurt the most people that it can at all times that it's moving. So if there's an opportunity to go for a clump of people's stops that are obviously stops because they go for an obvious level and it's obvious that it would hurt them, then that's the most obvious movement that we would make 9 times out of 10. Now, what's funny is if you look at those same levels and say, hey, we came to a 61 and it's gonna hurt those people. And that's in the morning, and we saw that. Then it comes down to a big, long consolidation where it takes much patience and discipline to get through. You can count the fact that most people wouldn't have that patience and discipline to get through it. We see the same 61. It ends up working because they're all gone. So the same analysis that didn't work in the morning could work later in the day because of the player count being different, basically. What is it going to provide most of the value at the end of the day? It could break out at the close. I mean, if it did, it would be like crossing through this line right here and then breaking through for the close. Would that be acceptable? Well, the next thing to happen would be to come back down to these highs here from above and chop them. So like a motion that allows for us to get on top of those highs and then smash them from above. So the value, like I mentioned about 10 minutes ago, could be at the end of the day, and that's fine. You know, it could blow up at the end of the day. You know, what are we designed to do in this blowout here? Well, it's designed to break the trend, to go up, and to chop the highs that we passed. Chop, 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 right? So like this high right here, we come back and attack from above. These arrows that I had drawn in here, they are all complete now. All of them have been finished. Every arrow that I've drawn today has been fulfilled.